there. The Market Business Outlook Survey, which looks at expectations for the year ahead across 650 U.S. private sector firms, indicated that corporate sentiment eased to a post-crisis low in the latest outlook period at 33.2%. Expecting a rise in activity over the 12 months was down from 51.4%, basically 20 points. Needless, U.S. firms indicate the degree of positive sentiment towards future growth remains stronger than the global bench demand of 27.8%. The Republic of Ireland is at 67.1%, and the UK at 55%. Were the most optimistic nations there, while the lowest confidence was recorded in the Russian Federation at 9.8% and France at 12.6%. U.S. Within the U.S. economy, manufacturing is much more upbeat about future output levels at 42.5%, than the service sector at 28.9%. And let me see what else is in store here. Okay, this is the market flash U.S. service PMI. We look at it. The seasonally adjusted market flash service PMI, business activity index, which is based on approximately 85% of the usual monthly replies, registered 56.3 in November, down 57. It would be in October. Lowest reading since April. Weaker service sector output growth largely reflects a moderation in new business gains during November. The latest rise in incoming new work was slowest for 7 months. And this is from Chris Williamson, the chief economist. A fifth consecutive month of slowing in growth in the service sector adds to a sign that the economy's upturn has lost a considerable momentum, though it's important to note that the pace of expansion remains robust by historic standards. Very important there. After manufacturing PMI showed factory output growth slowing in November to the slowest since January, the weaker pace of the service sector expansion put the economy on course to grow at an annualized 2.5%. However, growth has really eased from a very strong rates early in the year. Importantly, even the slowest rate of growth signaled by the PMI survey remains sufficiently strong to generate robust numbers of new jobs. Firms took on staff at a rate consistent with another increase in payroll numbers, roughly 200,000 in November. Survey began in 2009. Meanwhile, unfinished work increased across the service economy for the fourth month running in November. The current period of substantial backlog accommodations is largest since 2012-2013, suggesting continual pressure on operating capacity. This in turn supports employment growth during the latest survey period, with the pace of job creations accelerating to a 5-month high in November. This is very good when you're in Q4, because Q4 is a very interesting quarter. It can be sometimes a slower quarter, depending obviously on many times what retail sales do. Increased payroll numbers also reflect an upturn in confidence towards the business outlook. More than half of the survey panelists anticipate a rise in business activity over the year ahead. November's data signals that the service sector input cost inflation moderated for the third month running. That has lots to do, incidentally, with petrol. That's why we're sort of tying this up together here. At 56.1 in November, down from 57.2 in October. April reflected the weakest contribution there. The composite index is based on the original survey data from markets, U.S. service PMI and the market manufacturing PMI. And that will do it for that. And let us move along here. Now to where the retail economy is. This is from Reuters. Brick and mortar sales edge lower at the start of holiday season. U.S. Shoppers spent slightly less money at brick and mortar, that's the basic stores, on Thursday and Black Friday than across the same 2 days in 2013. Sales at retail stores total about $12.29 billion on Thursday, down 0.5% from $12.35 billion spent last year. That's according to Shoppers Task, the research firm stuck by its forecast for November and December sales to increase at 3.8%. Data highlights the importance of Black Friday, which until a few years ago kicked off the holiday shopping season as more retailers opened on Thanksgiving. That had a market effect too. In other words, people went in to get the bargains and they disappeared. It points to increased price competition among retailers, which have been discounting by 30 to 40% this year, compared with 30 to 50% in the recent past. That's Shop Tracker there. Founder Bill Martin told Reuters. I think we are seeing is those early promotions coupled with pretty deep discounts. Customer traffic rose by 27.3% on Thanksgiving Day from a year earlier, reflecting a sharp increase in retailers opening for business on that day. Traffic fell 5.6% on Black Friday. Martin cautioned that after taking the 2-day figures as a sign of slack holiday demand, he noted Thanksgiving and those combined for 1% growth last year, underperforming growth of 3.1% during the entire season spanning the month of November and December. Online Thanksgiving and Black Friday sales tracked by none less than Adobe Systems, which were a record $1.33 billion and $2.4 billion, up 25 and 24% from a year earlier, respectively, beginning on November the 1st and November 28th. $32 billion had been spent online, up 14% from last year. It's interesting how many firms are in tracking these days. Adobe, of course, Adobe is known for Acrobat, the Adobe Reader, the Adobe fonts, etc., has redone their business model to move into this kind of an interesting situation. Several traditional brick-and-mortar retailers reported strong online growth, reflecting efforts to compete more aggressively with Amazon. Target, which is offering, and I remember last year their problems, free shipping for online orders during the holiday, said it had record online sales on Thursday, up more than 40%. Now this is going to be very interesting that these various operators are getting these online sales, and they are up. So much more mobile shopping is happening, and that is part of what is driving e-commerce activity to new heights every year. That is a principal analyst at Adobe Digital Index. The Adobe Digital Index is something new there, and Tamara Gaffney is the lady's name there at that particular index. Something new to happen. Let's go now to the BBC. We kind of moving a little bit slower than we wanted to. We wanted to catch something with Bloomberg, but we'll have to get to it. Incidentally, there were boycotts going on, boycotting the Thanksgiving Day opening, and also the so-called Black Friday. And that was out of the Ferguson incident. In other words, a political situation there that brought that about. And there were people also boycotting on the particular day because of the Thursday. Consumers felt that the workers there should work in a different situation. Now, from the BBC here, we see that big headline: U.S. Black Friday quiets as bargainers spread over 2 days. Crowds gathered at U.S. retailers' centers appeared to have exhausted some of their shopping enthusiasm on Thursday. The consumer clearly enjoyed shopping on Thanksgiving. That's chief executive of Target. The cyber shopping. Now, we have Cyber Monday. Some people also boycotting that. Walmart said it was the second highest online sale day, even after last year's Cyber Monday. Now, the first Monday in December, which many people online, it's a little different this time. Another retailer, Best Buy, actually went down and they were off the line. Black Friday had been the top sales day of since 2005. This is again from Shoppers Track. And in second place is Saturday before Christmas, when last minute shoppers go out there for people that are in the holiday service. Now, also at Walmart, there were protesters there in New Jersey and other places. Our Walmart campaign is a coalition of Walmart workers and trade unions. And some Walmart workers were also on strike. So a number of things adding to the holiday season. And we really haven't got the whole story in here as to where that is going. Let's go to the Indian economy. Growth slows to 5.3% in India, and the rate was slower than a year earlier. It was still better than many analysts had expected, no doubt about that. Both the service and agriculture sector performed better than anticipated, despite a weak start to the monsoon. The GNP growth number is slightly better than we expected, no doubt about that. Observers predicted the economy would grow at a rate of 5.1%, which is a respectable benchmark interest rates at 8% in India. January, in the effort to curb inflation, India has a history of higher inflation, but recent dropped below 6%. 6% is respectable for a developing economy. So thus we see India is moving on here. And petrol prices, this made the BBC also. 4-year low there. And basically the same thing. We won't go over it. The Brent crude now has fallen more than a third since June. We needed that to happen. There's no doubt about that. And a comment here from Michael Witter, senior oil analyst at Societe Generale. Saudi Arabia and OPEC will no longer be the mechanism to balance the market. They have relinquished that role, that's according to him. And the prices hit shares in many of those. BP, Royal Dutch, Shell, and all of those were lower. It'd be expected. Also, these Exxon Mobil and some others there also hit. And we'll take a quick look at these energy prices here. Prices hit. Chevron was down 3.5%. Exxon was 4.1% lower. Tech heavy Nasdaq at 0.09 there. Southwestern Airlines rose 6.4%. Delta was up, because all these use jet fuel, was up 5.4%. JetBlue is up 7.5%. And that would do it for those. And let's see what else we can catch up here. Inflation rates fall in the Eurozone